All right, hey guys, I have a lot of thoughts, but I don't think this needs to be too long of a video. And truth is, I just recorded a 27-minute one that I don't know why, but I can't find the screen recording. So I got to do it again, and I'm going to maybe cut some of the fat. We are in a solidified downtrend. We have yet another lower high, and this one is below that 675, 76 area that was so important. We saw a lot of support in that area until we lost it. It was the first leg of what I've been preaching on this channel to look out for months now. What a corrective market looks like. First you lose the daily, then you lose the weekly, and if you lose the monthly, things get nasty, and we typically retest prior cycle highs. It's what we see in corrective markets. You lose the daily, the weekly, the monthly, things get nasty. So that's the world we are living in, the room that I am reading. This is a solidified downtrend. I do not understand long-sided bias right now, okay? We're simply in a downtrend, and in order for that to change, I've been talking about this a lot recently. You need to change character and then confirm. That means taking out a lower high and then holding above the recent low. Okay, so you have to change character, hold above recent low, and then push back up again would be the first leg of the changing character. And do not feel like you must be a hero and catch that move, because as I mentioned in the last video, if it is going to be a real rally, there are plenty of opportunities that come from a new uptrend. Okay, every triple R in this one worked. Every triple R in this one worked. Okay, yeah, you lost one here, but then you get right back into a world where every triple R works, and we get another one here. You know, more often than not is the world I like to live in. Another thing I want to say, there is a difference, and something you need to be paying very close attention to in the current environment. There is a difference of a waterfall correction and a sustained bear market. We don't know which one it's going to be yet, so it's something I will articulate and continue to evaluate and share my analysis on that as things play out here. If we do not get that change in character and confirmation back to the upside, I will remain bearish purely due to price action. I'm a swing trader. I'm going to trade the momentum of the market. If we have a trend, I'm going to trade it, okay? We're beginning a downtrend, okay? It's that simple. Let's see if we can start to get good follow through. But again, as I said, we need to be evaluating whether or not this is going to be a sharp vertical waterfall correction, where I'll talk about that more as it comes, but I would much prefer that to happen as opposed to a sustained bear market like we had back in 2022. Either one presents its opportunities, so I have a short position on right now. I'm all set with it, but if I'm going to do any additional shorting, so we just had the Fed, Powell speech, all the stuff. Not the best reaction to it. I'm not very surprised. I don't want to get into geopolitics. I don't want to get into the oil trade. These are evolving situations, but something that I noticed he did say yesterday was that, you know, as long as oil goes up, then we're going to have consumer contraction and inflation. Okay, inflation. So bad PPI print yesterday as well. So there's some stuff to be worried about. But guys, I would say don't blame this on yesterday's news events, or, you know, whatever the current news environment is, doesn't change the structure of the market that was warning us of this for months. First, we started going sideways, which was a changing character from an uptrend, okay? We stalled out, we started churning and going sideways. I've been saying for months to notice that and to be more cautious, get the position count down and the size down. Thank you so much to the boot campers that are reaching out to me saying you've been doing so. I love it. I love it. Some of you guys are telling me that I've had a 75, an 80, like an 83% cash, a 95% casher. Pretty work, boys and girls, guys. Y'all, pretty work. I'm proud of you. All right. So listen, don't force anything yet. I'll let you know when I see a change in character that confirms. But for right now, I'm favoring downside of price action. But yeah, look, guys. So if I'm going to initiate any additional shorts, SPY puts, whatever it may be, maybe some companies, there are some that look bad out there. I'll save you some time and not do any short name ideas here today, because, you know, we could definitely get a little bounce here as long as we remain below the recent swing high, then, or lower high, however you want to put it, you know, then it's just, that's the next opportunity to take some shorts down. Okay, so I could maybe initiate there. Alternatively, if we do just sort of like really sell off coming off of yesterday's Fed, if we sell off, I expect, you know, a reaction around the monthly level. So you could maybe get a reaction that pops up there, and if we fail that, yeah, I'll short that. Okay, so we'll talk about that when and if it comes. It'll look very similar to this right here, which is the last time I shorted the market heavily, you could say, multiple full-size units. So yeah, like that's that. Guys, I'm concerned with the market, okay? The Qs is holding up a little bit better. It's got this balance that it's in, whereas the SPY is breaking out of balance to the downside. This was the balance. It's breaking down. The Qs is still in this balance, so, you know, a little pop Sure, but if it doesn't take out the swing high and confirm, then it's a downtrend, okay? But if we lose this, guys, things are gonna get nasty. That is a short, same look there, okay? That's what it looks like, losing the level, popping back up, failing it. That's a short, all right? So SMH as well is looking a little head and shoulders-y. Right shoulder possibly getting put in here. We break this neckline, guys. That's going to be nasty. Again, that's a short. And I'll talk about MU yesterday. This isn't what you want to see, right? Great earnings numbers and the market sold it. So not what you want to see, but guys, also not so surprising. We're up, you know, some of these memory names up 1,000%, up 100% since the last earnings report. Come on, guys. It's okay for this to pull back and cool off a little bit. Maybe if the full market corrects, maybe we'll get a new opportunity with this. If you want to remain aggressive, you know, really we haven't done that much damage. We're about here after hours off of the reaction to earnings. So listen, a retracement reaction at around our level and remount of the 9 at that point, you could risk. And I would say just control your size and realize that you're fighting the market. Unless the market turns around with that position, that would be encouraging, okay? So yeah, guys, I'm not going to be too aggressive to the upside. We are in a solidified downtrend. I will continue to talk through it. I think that's okay for today. I certainly had a lot more to say in that other video. I wish I didn't lose it. But guys, as my thoughts evolve, I will bring them to you. But right now, I am just watching the market. I have a short on and ARC. Let's see. I'm about almost halfway through. I might need to start worrying about theta here, but if the market does crack, I expect to be just fine here on this position, especially if we get a sharp move downward. But this was my original vehicle for the change in character that I saw in the market. All right, so we'll see how this works out. The NEE position, I did punch out of this for a 30% loss on this position. It was a 1/8 size of a single unit, so I lost like less than 0.5%, I believe somewhere around 0.5% in the account, still up over 15% on the year, guys. I am just fine with my risk management at this time. You know, this was just too pretty to ignore. And frankly, the trade's not broken. I just, you know, I'm fighting the market. So I just punched out of it. And, you know, I was trying to have a pulse on the market through this being one of the better, more attractive looking sectors, whereas everything else is looking pretty nasty. This was looking really good, okay? Cup and handling, shake and go, triple R'ing right below all-time highs. Man, I mean, if we were in a better market, this was a slam dunk trade. It was a slam dunk look, but not a slam dunk trade because I went against the market, of course. So I controlled my size. It was more of a pulse trade than anything. And, you know, maybe even I'll admit maybe a little bit forced because, again, it was counter market, counter trend of the market. So if the market's really going to correct, then all of these ETFs, as good as XLU looked when I took this position, you know, if the market's going to correct, I expect all of these to pull back. That's just what happens. And real bear markets. Okay, so we'll see what we get, guys, but this is not looking good to the upside, but maybe we'll get some true follow through and continuation to the downside where we can put on some positions. And as I said, guys, I will talk through that, walk through that as it comes. You know, something like A-Lab looks a little bit nasty. Maybe that guy will come back and scream at me again. I got a nasty email when I was literally talking about I think right here, either right here or right here, I was saying I don't like this. Let it break out of this range and we can do the next triple R above. You know, the market was feeling shitty at the time and I just didn't like it, and somebody flipped out on me. I don't care about this company. I'm a swing trader. 3 days, 3 months, I didn't like it unless it triple R'd above range. It did not, and look, frankly, I was right. I don't like saying that, but damn, dude. Calm down. It's not that I was right. I don't care about that. Okay. It's structure. All right. I know how to read market structure. I know how to notice a change in delivery and tone and character in the market. And the market was stalling out. And okay, we were in the middle of this churn in the market. I'm not going to just guess that A-Lab is going to be my savior when it can't get out of its range either. Okay, is really what I was saying. And then, you know, at this point, it was just too close to earnings. And anyways, look what we did here. We got below this prior high and, you know, look, we're below all major moving averages, popping back up. This is a retracement reaction, remount to the downside. If you're looking at this upside at price action, you got a rip, pulling back, testing the area, okay, held structure, retracement reaction, remount, except it's to the downside, therefore it's a short. Probabilities favor a short in this. CRDO has a similar look, all right? You know, I talked about this. I talked about this, guys. Okay, I literally said after earnings, when it had a bad reaction to earnings, see if it can come back up, retest the area. That's why all this shit is drawn in there. See if it retests the area and fails it. If it does, it's a short. No, I didn't take it. I have a short on, and I have the exposure level that I'm comfortable with in the current environment. Guys, I told you what I'll look for to add. It's going to look like that. I'll short that. Okay, I will add to shorts, I will initiate new shorts or whatever, and if we're going to trade upside, it needs to do this for me to even get remotely interested. I will not predict, and if we get a correction, I will talk to you guys about my investment strategy and plan, but that is even more simple than anything I talk about on this channel. If you want to get a head start on that, I have an investment video on the channel, and I have tomtool.app, a tool that I built. Go check it out, okay? Investing is easy, as hard as that is to hear at times. It is. You just need to wait for RSI Weekly, 30 triggers on the best companies in the world. Happens around every 1 to 2 years, 18 months, call it, and it is a fantastic time to buy the best companies in the world in extreme oversold environments, which we are not in. We are not in extreme fear. I am not calling bottom at this time without a change in character that confirms. That's enough time saying the same thing, but I mean it. Guys, stay safe, manage your risk. Need some help? I'll work with you. I'll teach you 6 models, proper risk management, help you build your risk tolerance plan, match it to the market environment, and actually outperform this market, okay? The markets are a brutal teacher. There's a lot of bullshit out there. If you need to scan me, do it. Look through my stuff. Look at my analysis for the last 5-6 months since I've started this channel. Email me. Let's do a call. I'll answer any question you have, okay? If you need help, don't be too proud to ask for it. I can help you. I would love to help you. That's enough. I do not like to be overly salesy, but I am really enjoying helping those that I am, and the community that I'm building, it's given me an outlet. I am grateful. Guys, stay safe, manage your risk. Let's go make some money. We're in a downtrend. Respect it.